everyone, and welcome back to another episode of the Allocators Playbook. Today, with me is a very special guest who has expertise in both the Saudi region and the US and has wonderfully created a bridge between the two regions through his allocations. Welcome, Faisal. How are you? And do you want to talk a little bit about yourself?
Absolutely. And first of all, it's a great pleasure, Muskan. It's always lovely speaking with you. And I've really enjoyed being parts of the different events that Markets Group has invited me to. And I've enjoyed the events, the topics, the audience, and the venues. So thank you for having me. Just kind of 30, 60 seconds on myself. I've been in the Gulf for about almost 15 years now. It's a long time. I moved here from the US and I've been in the investment space and corporate M&A space through and through. So currently I'm in an investments role in Riyadh in a PIF portfolio company looking after the tourism space. Previously, I spent a few years with Aramco looking at corporate M&A and joint venturing. And before that, I was in Bahrain in a couple of private equity roles, one with Investcorp and one with GFH. I spent a few years in US in venture capital and investment banking, and that gives me an interesting vantage point where I've looked at the US markets, and now with kind of speaking to a lot of US friends, I kind of act as a bridge between the Saudi market and the US market. So happy to share my views about how they look at Saudi from the outside and how is Saudi looking to grow into a real global player on the investments sector.
Absolutely, that's lovely. And I want to actually start by asking what made you move from the US to Saudi in terms of like how did you want to reshape your career that you made that move?
Look, I think it's a very interesting question, and I think it would be, if you go back to the '07, '06 timeframe, Dubai was making waves in the international scene the way Saudi is doing now.
Yeah.
And Saudi was just considered, I think, more a frontier market. Bahrain was, had just launched a $1 billion private equity fund to invest in the region. And, I was an investment banker working at JP Morgan in tech, media, telecom in New York. And I had a few interesting discussions. I got introduced to Investcorp, which was about to start investing in the Gulf. And, I had just started kind of, we had two kids, young kids. I wanted to be close to my home base. And so everything kind of, as they say, the stars kind of aligned. It was a great role with a really good team at Investcorp. The market was just kind of, I would say starting out for private equity in a big way. And, I would say the timing was right for the family and for professional reasons.
That's brilliant to know. I think the stars perfectly aligned for you there. And diving deeper into your private equity expertise, in the last few months, we've seen an increased engagement in Saudi Arabia and the US, especially in the world of business, finance, and AI. There was also a Saudi US summit back in May in Riyadh, and then most recently in Washington, D.C. In this context, how has Saudi Arabia evolved as a destination for inbound international investors? And specifically, how is the US Saudi investment relationship evolving when it comes to allocators investing in Saudi?
So look, a really interesting question. It kind of, takes me back all the way when I moved to the Gulf. The first acquisition that I did was an acquisition of a majority stake in a very large, well-known Saudi family-run business. I was living in Bahrain and the transaction was in Riyadh. And when I look at Saudi now, I feel like it has transformed in so many ways. And I think the biggest change that has happened, the positive change has been that the attitude is now very different. Attitude can actually be a massive thing for a person and or for a nation. And I think Saudi is I can say that is committed to really modernize and grow and I would say stamp their name on the global scene in a very meaningful fashion. I think when I meet with the young people now at work and outside, I'm just amazed as to how far along we have come.
Yeah.
The second, really, I would say the objectively good change that has happened is I would say, the arrival of women in the workforce in big
Mm.
numbers. And I
Mm.
think that is such a welcome change, and it's really exciting to work with a lot of really talented, really enthusiastic women who I think are doing a phenomenal job. Obviously, the country has become more open to entertainment. I think they want to just
Mm.
be known globally also as a destination.
Yeah.
And while all these changes were happening, I think there was a lot happening behind the scenes on the legal framework,
Mm.
on opening up the country for ease of doing business, and also on foreign ownership. So when you look at Saudi now, just to kind of throw some statistics, Saudi is a part of G20.
Mm.
Saudi is a $1.2 trillion GDP economy with a debt to GDP ratio of 30%, which is very respectable for an economy of this size, to be honest.
Mm.
So as a consequence, if you just kind of look at some benchmarks, if you look at the MSCI Emerging Market Index, Saudi was 1% of that index in 2019, not too long
Mm.
ago. Today it's around 4%. So
Mm.
clearly the brand Saudi is growing in a good way. That brings me to a very interesting question, the second part of your question, which is, how is the US investor class looking at Saudi?
Yeah.
So as we all know, US Saudi relationship goes way back, more than 70 years. As we all know, America helped establish Aramco, right? Which is
Mm.
how the whole oil revolution started, I think, in the Gulf. If you look at the American institutional investors, the large, gold-plated names like Carlyle,
Mm.
they have been coming to Saudi for a very, very long time, for decades, right? I mean, they've been raising money from the market and taking it to US and investing. But frankly, the Saudi brand has not always been great with the Americans. For many, many years, I think Saudi was not in a market to be investing, to be looking at for investments.
Mm.
I think it was only after 2015, 2016, when the Saudi reform started to happen, I think when the brand started to get, more interesting.
Mm.
But really after COVID, after 2022, after 21, 2023, that's where Saudi, I would say, has arrived on the international scene, especially with US investors.
Mm.
If you look at, especially under the current Trump administration, when he came in May for a summit in Riyadh, he brought in the captains of the US industry with him, the Elon Musk and
Mm.
Jensen Huang who came. And so it was not just the US administration coming in, this was the US economy, the bellwethers coming in with him. And
Mm.
then another summit happened 2, 3 weeks back in Washington, D.C., extremely well attended. So I think, and when I speak with my friends in the US, both on the West Coast and the East Coast, every single one is looking to do business with Saudi. Of course, many people want to raise money, but many people want to also do business in Saudi. And when it comes to companies looking inwards, I think I would say Saudi brand has never been better. Of course,
Mm.
it will continue to grow because
Mm.
I think the window has just opened up.
Absolutely. And I
Yeah.
completely agree. I think this is a global market sentiment towards Saudi that everybody is really excited, yet slightly nervous about investing in Saudi. And that being said, so how actively should US-based investors look at Saudi Arabia today? And who should invest in the space? Should these large institutional investors, or should it be US family offices or strategic investors? Who are the right people, and what can Saudi cater to in that space?
Look, I think it's a long discussion, but just as in a nutshell, I would say that look, all of the above should be looking at US, and some of them are already looking at Saudi, and some of them are looking in Saudi. So
Yeah.
if you look at the large infrastructure investors, right? BlackRock has already done a couple of very
Mm.
large transactions. They did. sale leasebacks of a couple of infrastructure assets. But then there are the likes of Blackstone, Warburg
Mm,
Pincus, TPG, who have already announced intent, and I'm sure I mean, there have been a couple of small transactions, and I'm
mm,
sure that they are actually actively looking to invest. And there are many, many others, including in Europe and Asia, who are looking to invest in Saudi.
yeah.
When it comes to strategic investors in US specifically, I think, of course, they should look, but on a case-by-case basis, depending upon the sector.
Mm,
For instance,
mm,
entertainment could be an interesting sector.
mm,
That should apply as well to large family offices in US because many of them actually have their interest in the entertainment industry in US.
mm,
Uh, and they would love to come to Saudi because that market is really opening up for entertainment. Another sector could be the tech sector within Saudi, where I think US tech companies should really look at partnerships, joint ventures, maybe even
mm,
minority acquisitions and majority acquisitions. I think the more interesting question would be on the long tail of the smaller family offices in US. I think they vary substantially in terms of sophistication, focus, bandwidth, resources. So
mm,
my view is that if you've never transacted as a US family office in Saudi and your core focus is looking at, like, for example, the Americas,
yeah.
I would only invest in Saudi if you have very strong help on the ground in Saudi.
Mm,
Otherwise, I would say you're better off getting indirect exposure to Saudi through fund managers because Saudi investing in Saudi directly is a local game, and you need to
mm,
have very strong local presence. So I think if you look at the different tiers of investors, I would say to each, they have a different
mm.
strategy, and because all of them have different set of resources, different level of focus, different level of R&D they can do, and different level of relationship building they can do.
Absolutely. And you said a very interesting thing that allocators in the US should only invest when they have a strong base in Saudi, on-ground presence. How can one build that? And what do you mean by a strong on-ground presence?
Look, I would say that Saudi, like other Gulf countries, but maybe in some cases more so, is an extremely relationship-driven country.
Hmm.
Um, Family groups are a very large player in the economy. I mean, so is
Hmm.
the government. Um, and for an international player to come into Saudi, I think, flying in and transacting and flying out is just not going to work.
Hmm.
So I think depending upon again who you are, I think for the large institutional players, and as you've seen the evidence, some of them have already opened offices. So BlackRock is present actively. They have an investment
Hmm.
team here. And of course, they're raising capital, but they're also deploying capital here. So
Hmm.
for the large institutional player who have the resources, I would say they should absolutely think about opening shop in Saudi, as
Hmm.
long as strategically they've decided to invest in Saudi.
Hmm.
If Saudi is a strong strategic market for them, then they should be physically be present. Short of that, I think the other way of doing this is to have a local partner, which could be a JV partner.
Hmm.
And if you don't want to get into a JV, then the substitute would be a combination of a shareholder, a local shareholder, a group of local advisors on the board,
Hmm.
and some local staff. And I think with that combination, if you have picked your partners and your staff and your advisors properly, I think you can, I think you can enter the market. But I would say that anybody who is looking to have a long-term presence on the ground from an investor perspective, you absolutely need to have a team on the ground that actually knows the market. Because if you bring a team from the outside, I think the learning curve is quite long. It is
Hmm.
not 12 months. It is a long learning curve.
Absolutely. And you bring a lot of expertise within private equity and venture capital space. So I would like to take a minute to kind of dive deeper into private equity, especially sectors and strategies, and possibly sub strategies, which are very attractive within private equity in Saudi.
Absolutely. So look, I think when it comes to, let's just focus on private equity for a second. So look,
Yes.
when I joined, or when I moved rather many years ago, I was in private equity and we were sector agnostic, right? So I looked at education, I looked at
Hmm.
healthcare, I looked at manufacturing, I looked at transportation. Then during my days in Aramco, I looked at things which were as diverse as renewable fuels to
Hmm.
aviation.
Hmm.
And in my most recent role, I've been looking at a little bit in real estate, but then also
Hmm.
entertainment, hospitality, right? These are
Hmm.
very variable sectors. And I think as a general statement, I think there are opportunities in all of the sectors as a general
Hmm.
statement. But let's break it down into maybe two large buckets, right? The one is the infrastructure bucket, right? So as I mentioned earlier, within infrastructure, there were two very interesting transactions that happened, which was sale leasebacks of two
Hmm.
Aramco assets. There, BlackRock or its affiliates were involved in both of them. There are many other assets like this which are very interesting, and I can tell you as an ex-Aramco person, Aramco as a counterparty in a transaction is just such a phenomenal credit to have for any large institutional player.
Hmm.
Other infrastructure, classes could be district cooling or water desalination. Saudi, as you know, is a very big player in water desalination. So
Hmm.
clearly, the big players, global players, I think they understand these asset classes well. And I think the return profile and the credit risk from that perspective, Saudi is an amazing market for that.
Hmm.
Now let's go to the private equity market. So I would say private equity, you have the large cap players, right? So some of the names that we gave, so Blackstone, KKR, Carlyle, etc.
Hmm.
These players typically, obviously, depend upon which fund are they investing from, typically like to invest large amounts of capital.
Hmm.
And my view is, having been here for many years, I think that doing many billion-dollar plus type transaction is just difficult. I think so. The market is not big enough to absorb many recurring billion-dollar type transactions. We also don't have a long history of secondary transactions where P firms have transacted from one another, right? So there have been a few
Hmm.
transactions, but not very many. So I would say the real opportunity for private equity is what people would call the mid-market, right? So if you look at equity capital injection of say 50 million to $200 million type range, which in US some might even call it lower mid-market, I
Yeah.
think you'll find a lot. Especially when you focus on the 50 to $100 million range, I think there's a lot of opportunity. These
Hmm.
transactions can happen, as a combination of a cash out and growth injection.
Yeah.
Now, let's get into some sector examples, right? So again, we can talk for a very long time about this, but let's take the example of education. I think education is a very interesting sector in the Gulf and in Saudi in particular. There's a
Hmm.
great demand, and one type of transaction, if there was capital to be deployed, could be a roll up within education. So one can acquire
Hmm.
a platform company, and you can roll up other assets, educational, assets into that entity, and you can realize the economies of scale through joint procurement and similar means. One consideration would be to make sure that while you want to bring in the international standard of education to the country, you also want to be aware that there are local content and local education requirements. So you got to balance them both. But
Hmm.
otherwise, education is a great sector because it gives you such a great cash flow profile if you're running it well. So that's one example. The other example could be food and beverage. So within food and beverage, I think my personal preference would be to look at casual dining or maybe fast
Hmm.
food. And I
Hmm.
will really focus on any chains which have a large economy of scale. And
Yeah.
somehow, if they have cracked this central kitchen concept where they can do a lot of, the common activities in the background, for example, cutting and mixing, and if
Yeah.
they can effectively ship these ingredients out to their outlets just in time, I think that allows them to really benefit from the economies of scale. I would stay away from small restaurant chains of two, three, four, five outlets, and I will stay away from a single one or two fine dining concept because The fine dining market does suffer a little bit from the flavor of the month kind of concept where it goes in and out of fashion. And if you don't have big, chain which have where you can consolidate the administration, accounting, procurement functions, and if you only have one outlet, I think it just becomes very difficult. So I would once again focus on the large chains and more towards the mid price range, which is I think is the casual dining. Another market would be hospitality, which I think is a very interesting market, and I think it's not talked about enough, I think. So there is a very large gap in 3 to 4 star hotel operator chains.
Okay.
One opportunity could be, and I think, I don't know how much you have traveled. I travel extensively in Saudi. I think there is a large gap in 3 star hotels in terms of quality of service.
Yeah.
So one opportunity could be for international investors, US investors, strategic investors especially, to come and acquire a majority or a minority stake, preferably a majority stake, take it over and really upgrade the service. And then you grow because there's an opportunity to set up a truly good, strong brand in the mid-price segment. Other examples could be clinics. These could be regular clinics or dental clinics. Again, this is where you could do a roll-up strategy, a combination of a roll-up and a roll-out.
Yeah.
So you can acquire a small platform, you can add on other clinics, but you can also do organic growth because it's very easy to set up a small clinic and get it up and running and get it to cash flow positive in a quick fashion, as opposed to, let's say, an educational institution which requires a period for it to get to EBITDA break even. So I think, for me, I think these are interesting sectors. I think one other sector, which is, I would say, not exactly private equity, is real estate development. I think the country has a massive opportunity in bringing in the tier 1 development standards of quality that you have in the US.
Yeah.
And I think that's an opportunity here. Plus, I think you can see opportunity for facilities management. Then I would say one other sector, but there I think it would be difficult to deploy large amounts of capital, would be the training sector. So think about training hospitality staff, training of drivers and chauffeurs, training of tour guides. I think there is a huge gap. It is a great market need. A lot of stakeholders in Saudi are actively looking at that sector, including ministries and authorities and PIF, and including family offices. This is not a market where you'll have, you can scale it endlessly, but there is a window of opportunity right now for somebody to get into that market. So I think for me, for the private equity market, I think these would be the key takeaways.
Absolutely. And could we take a second to also dive into strategies that are working really well within the private equity space in Saudi?
Yeah, so I think that's a great point. So I think let me make a general statement, right? So we talked about the sectors, we talked about the players.
Yeah.
But I think a couple of things that I see do extremely well in the US, and I think in Saudi still it's an opportunity. Is that in US, you can good private equity firms, especially the ones that have done well and that have done well across many cycles, have been able to demonstrate real value creation post-acquisition. So they do that by bringing in either operating partners or people who have subject matter expertise. They're sector experts, and they bring them in and they add value, and they do that right after acquisition. So they will come in, the team is parachuted, they come up with a 100-day plan, and then you look at all the levers of growth and of extracting efficiency from the market. And I think in Saudi, I see a lot of family-owned large conglomerates where there is a potential for extracting that value and to bring in that efficiency. So
Yeah.
I think if a private equity firm or a group of private equity firms, if they want to enter the Saudi market, I think that would be a great opportunity if they can be really hands-on. That's number one. The second strategy would be, and I think that's more of a recent phenomenon, is the use of technology, but particularly AI. So in the US, I think a lot of companies are laser focused on using AI on things such as enterprise workflow, on reporting functions, on marketing campaigns, and on programming and development, coding. I think that wave really hasn't hit Saudi in a proper fashion yet. So I think there's a massive opportunity. You look at the banking sector, you look at the telecom sector, you look at the retail, you look at family offices. I think any American private equity firms or strategic players who can come in, acquire entities, and then add value operationally, but also use technology. And I think
Yeah.
you'll be amazed that you probably can extract, or rather add several, percentage points in EBITDA margins. And therefore, you can, if you look at the way EBITDA is grown over a holding period, I think you can probably get more increment compared to the US market, where I think the room for creating efficiency is more saturated. I think there's a lot more opportunity in Saudi.
And I also wanted to understand how the secondaries market is in Saudi. Because especially within private equity, a lot of allocators in the US who are over allocated to private equity are turning to secondaries market in the space. Who are under allocated are looking to buy in the secondaries market. So how is that looking like in the Saudi?
Look, I think it's a very interesting point. I know of at least one very large regional player who was very interested in the secondaries market,
Yeah.
without naming names, of course. I think the issue is that in the US, the dry powder in secondary is probably quite significant. And if you look at the Gulf market generally and the Saudi market, specifically, a lot of deals are done on a deal by deal basis. And you will not find very many closed-ended funds which are willing to kind of, I would say, sell interest in a portfolio. There are some opportunities, but I think to deploy a large amount of capital, I think you could probably look at a couple of players here, and I can think of at least one. But most transactions here are done on a deal by deal basis. So I think there is a great opportunity to acquire portfolio companies of private equity firms for sure. But if you mean by secondary, where they go and acquire,
Yeah.
a whole portfolio, I think there are a handful of opportunities. Maybe you can count them on the fingers of one hand.
All right. No, thank you for that. And, kind of talking and diving deeper into private equity, I wanted to understand some pitfalls to avoid in private equity in the Saudi region.
No, absolutely. Look, so I think that to me should be the topic of a whole separate deep dive, because my own learning curve was long and steep and long. And as I mentioned earlier, the market is extremely relationship oriented. And therefore, I think if there's a new entrant entering into looking at the private equity, acquisition in the country, I would say, don't do 100% buyout, number one. Because there is a lot of value in a business that resides in the relationships of the controlling shareholder. And there is a typical way of doing due diligence that many American private equity firms do. And I think you don't capture all the nuances of the relationships of the incumbent management team, the shareholders, and the shareholder family in a due diligence process. You cannot quantify this. It is quite possible in many, and I've seen so many examples, that the key contracts and the key relationships with the ministries and municipality all reside within a family group, right? And if you cash them out, that value is going to go away from your hand. And I think you find out when you're left holding the company, and you don't want to be in that position. So I would say find a good partner that you can be a shareholder with. you can, if there's a cash out requirement, yes, cash them out a little bit, but keep them in so they have the incentive to support you. That's number one. Number two, I think if get to know your partners really well, I think
Yeah.
it's a similar point to the first point, but get to know uh, the qualities of your partner and the reputation in the market really well. And I think I cannot emphasize it enough, because these are things that you will not cover in the due diligence process. Second, I think third point rather would be, look at the issue like solarization, right? So
Mm.
it's a well-known concept. I think when you're looking at a transaction, you need to really understand the financial impact and the regulatory impact
Mm.
and the other impacts on the organization when you're looking to come into a sector. You don't want to discover that once you're really, very advanced in a transaction.
Mm.
And that's one example. The other example would be, just being in the know about different trends. So as an example, you look at the real estate rents, right? So real
Yeah.
estate rents have been out of control in Riyadh for some time. In fact, many of the small businesses have struggled. If you have a small restaurant, let's say, which entered into a short-term lease with a landlord, and then they're looking to increase your rents by 30%, which, by the way, is not unheard of. I mean, there have been
Yeah.
exorbitant increases in the rents. I think that can cause a business to fail, and there have been examples. So to the extent that the government announced a blanket 5-year rent freeze in the Riyadh city a few weeks back.
Okay.
And there has been talk of rent freeze across the whole country. Now, if you are an outside investor looking to
Yeah.
invest, you may not discover that until it's a bit too late, because
Mm.
these are things that may be known in certain social circles.
Yeah.
It may not be known to your advisor who is actually helping
Mm.
you do the due diligence. It will not come out in your financial DD report, although people may have heard chatter. But having a good local partner will help you uncover these issues before they become a problem. So,
Mm.
therefore, I think I will just summarize the whole thing by saying there is no substitute of being present locally with
Absolutely.
with people who know the market.
Absolutely. And we've talked about this quite a lot today about how it's really important to have like an on-ground team or a local partner. How do you get one who you can form a good relationship with? What are key factors to consider for a good partner? If I were to like ask in a very layman terms, yeah.
Look, so I think maybe start with, what are the good factors? Number one, and let's keep it, to, let's say, institutional partner, or
Yes,
rather a
yes.
family group, as opposed to individuals. So I think number one, I would say the capability, right? So if you're entering into a certain sector, you should figure out what is the capability of that partner, right?
Mm.
And this is not a desktop exercise. Even though people can make it into a desktop exercise, this is not a desktop exercise. This is for you to really do your diligence well, even if it's a verbal discussion with some of the old counterparties of the people that they've worked with. So
Mm.
capability is key, because you may find that like many markets, like many emerging markets,
Mm.
where information is not widely available. You can find claims of capability that may turn out to be not true. So you need to really need to get into that.
Mm.
Number two, I think, given that, many family groups here are extended into many businesses, they love to
Mm.
do real estate investments. At the same time, they may have food and beverage, entertainment, and whatnot. So you need to understand the financial standing and the stability of your partner, because there have been cases, and I saw a couple, at least one or two cycles, where the overexposure into certain sectors caused problems for some other sectors within the same family holding.
Mm.
And it can, if, for example, if you're partners with a family group in food and beverage, but they have certain liabilities in real estate, it can cross contaminate their capability and focus and attention span and whatnot. So I think, you need to, number one, ring fence these things. You need to understand them more, first and foremost. You know what you're getting into, and how you would you mitigate if things were to go out of control. And the third is, get to know the individuals, spend time with them. I think it's just very difficult to figure it out in a few meetings. And that's why having somebody either on the staff or as somebody who's helping you run the local office, be
Hmm.
someone who knows who spent time here. I think um, moving somebody from the outside and expecting them to do a very interesting transaction in first 12, 6 months is of course doable, but I think it just amplifies your risk.
Absolutely, that makes sense. And similarly, when it comes to venture capital, how do you define the state of domestic venture capital industry versus the US? And what are the key differences in that space? Also, what are the sectors that are very attractive and lucrative within venture capital in the Saudi?
Sure. So look, that sort of takes me to when I was a young associate at a venture capital fund in the U.S. So I joined that fund just in time for the tech bubble to crash. This was a long time back, and the company that I was part of, they started their fund back in 1978. This is going way back at the early days of the industry. So the founders of that venture fund had seen many, many cycles.
Mm,
So now looking back, I'm amazed at how well they handled a crisis. And this was a
mm,
crisis that was, one of the biggest crises to hit the tech sector. In fact, probably the biggest one, in the past 30, 40 years. So they really picked their winners. They made sure that their winners will survive and they would have the cash to, capture market share. And they made
mm,
some really difficult calls. They were
mm,
able to shut down companies. They were able to triage when they could. And I think it differentiated that venture capital fund and, from newcomers in the market. So when I now look at that landscape of the VC landscape in Saudi now, I feel like Saudi market or the Gulf market, broadly speaking, hasn't really gone through those cycles, right? So the market hasn't seen repeated cycles of VC funds who have raised money,
mm,
they've deployed it, they've exited that fund, and then they've raised more money, and they've not. So effectively, those cycles are by and large missing. So in other words,
mm,
these are the typical stage in evolution for a market which is in the process of discovering its strengths and weaknesses. I think there are some very smart, very, very smart people that I come across in VC space who are operating. I think some of them have small funds, some have mid-sized funds. There's no mega fund here. STV is doing I think, a great job. Wise
mm,
Ventures out of Aramco is doing a great job. There are many other funds who are active. I think if you look at the other deficiency that I would say in the market that I see is that if you look at the hardcore engineering and coding talent, I think
mm,
we're not there yet, to be honest. So I think real innovation in engineering and technology, and again, I'm comparing it to Silicon Valley and maybe China, right? I mean, of course, there are
yeah.
very smart people here, and KAUST has a phenomenal tech talent here, and their KFU PM has great talent, and then many other universities. But I'm comparing it to the Silicon Valley kind of landscape. I think we don't have the kind of deep tech talent that can start companies that can compete globally in deep
Mm,
tech. So, however, you have great businesses in tech-enabled services. So, going
mm,
back a few years, Kareem was an example that got acquired by Uber in a landmark
yes.
transaction. Souq got acquired by Amazon. Talabat is another great example. Fintech is, by the way, doing extremely well in Saudi and Gulf. So look at payment space, look at buy now, pay later kind of companies, they're doing phenomenally well. I think the real interesting opportunity for US VCs looking to Saudi,
Mm,
of course, they should look at deals and they should deploy capital. And I think that
yeah.
will have to be done on a case by case basis. But I think an opportunity I think that they don't appreciate enough is that for their portfolio companies, the opportunity to grow into the Gulf market, broadly speaking, is massive. Now, the problem is, and because I talk to a lot of my friends in Silicon Valley, most startups, even if well-funded, don't have the bandwidth or even the desire to actually dedicate resources to open offices in the Middle East because they're too busy focused on the core market. There's obviously the market is very competitive. So even though the opportunity to penetrate Saudi is amazing at the moment. So what I would really advise Sequoias and NEAs and Kleiners of the world is to consider opening up an office here and use that not to deploy capital. I mean, you can do those one-off transactions, but use it to help your portfolio companies to do business development in these markets. And now they will say, well, this is a time and expense to go and set up an office, but I can guarantee you that the amount of money and the resources you'll deploy here, you'll get multiples in return through the revenue and profitability that you will accrue to your portfolio companies. Because I know companies in AI and many other sectors that should come and capture market share, but they just don't have the bandwidth. And leaving it to every single portfolio company to tell them, well, you guys do it individually. I think most companies will they just wouldn't do it. So for the VC funds who have the AUM, where they have the resources, large companies, they should consider, kind of actively supporting the portfolio companies to grow into the Saudi market.
Absolutely. That is very interesting. Thanks so much for sharing that and kind of taking a deep dive with us there. Lastly, and I know we are running out of time, so I want to be very mindful of that. Lastly, any words of advice for inbound foreign investors coming to Saudi Arabia?
So I think I run the risk of just maybe repeating myself in the sense that, look, number one, don't do it alone, at least in the beginning. And, so you'll have to have a local support, right? That comes through, as we mentioned earlier, in many different ways.
Yes.
And I think, I've seen many examples where the partnership relationship doesn't necessarily work well because people were too eager to get into this very quickly and they didn't do the due diligence enough. So I think I'm kind of repeating the point that, look, get to understand if you're entering into a JV, a JV is like a relationship, right? It's easy to get in, but it's difficult to get out of.
Yeah.
And if you're counting on your local partner to deliver, make sure that you really understand that you know the capability of your partner to deliver. That's number one. Number two, your partner should know exactly what you expect them to deliver. And I think because there are cases where things are lost in translation. The local families are busy doing many different things. And I think capturing the relationship into a contractual agreement properly with real attention to detail is paramount. And as I mentioned earlier, again, it's a point that I'm repeating is get to understand the standing of the partner, by doing market diligence. And this market diligence will not be done by your advisors, unfortunately. This is not where you hire a consulting company and get them to do it.
Yeah.
Even firms like Kroll cannot, which does background investigation. This is not a KYC topic. This is get to understand the reputation in the market through some local people. And there are many things. I mean, there are financial situations, there are political situations, there is succession happening in the family, there's divergence of views within the shareholders within the same family. There are many situations where a transaction will go all the way to the end. It will take a year, and then it turns out that the family members don't want to sell. And all these things, sometimes you can discover, not all the time, but sometimes you can discover if you understand the dynamics. So I think that's why I'm kind of repeating myself, that understanding understanding that as a local is critical.
Absolutely. I think based on what I've also spoken to other allocators, this is something that most of allocators struggle with, finding the right partner. And I think the factors that you've shared today are really useful for anyone listening to this to kind of understand what they should consider while choosing a partner in Saudi. But thank you so very much for taking out the time today. And it was wonderful speaking to you. And I really hope we get to touch base very soon. But yeah, thank you so very much.
Yeah, Muskan, thank you for, by the way, your questions. Thank you for, giving me the time to kind of share my views. I think, look, I really enjoy, these topics because I was once a newcomer into the market. I was coming from, a background of having worked in the US, and I came in, and I think there was a learning experience. And I now see, in fact, I meet people on a weekly basis who are now entering the market for the first time. And, obviously, I've got my own bandwidth issues, but I think through a platform like yours, I think I can do my part in kind of, doing a bit of, it's not hand holding, but at least I'm giving them enough that they can, kind of, it's food for thought. So thank you so much for giving me the opportunity and enjoyed the conversation.
Absolutely. I'm very grateful that you could take out the time today. And I'm sure this will be helpful to so many of the US and even Saudi allocators to just understand the market a bit more. So very, very grateful that you could share your thoughts today.
Well, thank you, and have a wonderful day.